Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning, hello and welcome to Bazaar Morning Call. We're coming to you live as always from the CNBC-TV18 Motilal Oswal studios. Bang in the middle of the week, the market's taking its own time, at least here in India, to make up its mind about moving to those fresh all-time highs or not. We have a full day ahead. I'm Surabhi Upadhyay. With me is Nigel D'Souza. And Rima is here with us as well this morning. Hi, guys. Morning.
Hi. Good morning. Well, I was there yesterday and day before. Welcome back.
Welcome back to Rima. So, the mutual welcome backs have happened and it's, nearly a full house now.
Well, that's right. Surabhi, hope you had a good time in Goa. But as you enjoyed your time off, nothing really moved out here. The markets are more or less flattish. We had one up, one down day. Let's see, what's the road ahead.
Absolutely. So, if you talk about the headlines, they, of course, keep coming in. And once again, we've got one from the U.S. president. So even before we talk about what's happened with the U.S. market, what the dollar's done, etc., the big headline is coming from Trump, and he is talking about tariffs, and he doesn't seem to be too pleased with Japan, for starters. Take a look at what the U.S. president is saying, the latest on tariffs and that July 9 deadline.
I think we're going to have a deal with India, possibly, and that's going to be a different kind of a deal. It's going to be a deal where we're able to go in and compete. Right now, India doesn't accept anybody in. I think India is going to do that, and if they do that, we're going to have a deal for much less tariffs. We have a great relationship, great reliance, and really a great sort of a partnership in a way. But on trade, they've been very unfair, and those days are gone. So what I'm going to do is I'll write them a letter, say we thank you very much, and we know you can't do the kind of things that we need, and therefore you'll pay a 30%, 35%, or whatever the number is that we determine, because we also have a very big trade deficit with Japan, as you know. And it's very unfair to the American people.
Yeah, so not very happy with Japan, but suggesting that a deal with India could happen. It could be a different kind of deal. We know that the U.S. obviously is pushing for market access for agriculture and dairy. That's been the single most important sticky point. But it seems that, something might finally materialize before the 9th of July. Markets in Asia are reacting to this, and we'll talk about that in just a bit, including how the Japanese market is reacting, which is down. But let's actually start with the mothership and look at what happened overnight on Wall Street. Mixed session and a rotation away from tech into other parts of the market like healthcare. That's what we really saw, which is why you're seeing the Dow up about 1%. But the NASDAQ was down about 1%. Speaking of tech, actually, the side headline came in from Jeff Bezos. He's continuing to sell down Amazon stock. He's still the single largest shareholder, but he's selling now stock worth over $700 million. It's not a shock to the market. It's part of a declared sort of a plan. But that's something to keep on the radar as well. By the way, yesterday, the S&P 500 formed what is technically known as the golden cross. That's when the shorter-term moving average crosses the longer-term one. So in this case, the 50 crossed the 200 DMA. Technical experts see this as a sign of strength, but a caveat or a warning here. There have been instances in the past, including in 2019, where the indices, US indices, went on to make a golden cross, and then they fell 10% after that. So never say never. But anyway, that's an important technical pattern to take on board as well. Finally, that big, beautiful bill, at least it's cleared the first hurdle. And markets were reacting to that. It's finally moved through the U.S. Senate, and now it has to go through the U.S. House of Representatives, where it's likely to face some more opposition as well. Promises to add over $3 billion to U.S. deficit, and we'll see how that plays out. Yields actually edged slightly higher because this bill is supposed to be more inflationary. Deficit is a concern. So we had a 2-3 basis points kind of a leg up on the US 10-year yield. Let's see if we can bring the yield back up. It was about 4.24 last I checked. That's pretty much where it kind of ended down. The dollar has been very, very ranged. The dollar index, in fact, intraday fell. There we go. We've got the yield on the dollar. So 4.25 on the yield now. The dollar index intraday fell even below the 96.50 handle, and then there was a bit of a recovery. It's going to be all eyes on the jobs market now, because today you have the private sector ADP report that will come out, and the non-farm payrolls report comes out one day earlier, because Friday, remember, is 4th of July. It's a US holiday. So Thursday is when we get the non-farm payrolls report, and that will pretty much, determine the trajectory from here on. I just want to also quickly point out what Jerome Powell said. He was speaking at an ECB event in Portugal. And he went on to acknowledge that if it hadn't been for the Liberation Day tariffs, then yes, the Fed would have cut rates. And again, the currency market and the bond market were taking note of this. So that war of words between the US President and Powell continues. But he's acknowledging if it wasn't for the tariffs, I would have cut by now. Let's see if they move later in the year. Coming back to our market, the Nifty is continuing to consolidate around the 25,500 level. It'll need a bit of a push, whether it comes from banks or Reliance or IT, we'll have to see. But yeah, that's pretty much been the story. I'll just leave out with the paint sector. No stopping the headlines in the paint sector. The Competition Commission probe on Asian Paints is now a reality. They have initiated an antitrust probe on alleged abuse of dominant market position. It'll go on for about 90 days, but paint sector, never going out of the headlines. So plenty of news to digest this morning, guys.
Indeed. I think one number which caught my attention was the GST collections for the month of June. And here we're just putting forth a question. Are some of the recent high-frequency indicators flashing any sort of early warnings on the economy, perhaps suggesting a slowdown? So let's get the numbers up. The GST collections for the month of June came in at 1.84 lakh crore. This is a growth of 6.2% on a year-on-year basis, but it's the slowest pace of growth in more than 4 years. Also, to put it in perspective, 1.84, 1.85 lakh crore compares with about 2.36 lakh crore in the prior month. So that's one. Secondly, even the passenger vehicle sales have been subdued. We've been talking about it since yesterday, but you can see the pain on the street. So post-market hours, you got Maruti Suzuki's domestic passenger vehicle sales, and they're down close to about 13%. And in fact, barring an M&M, across the board, you can see pressure coming in on the passenger vehicle sales for the month of June. And finally, the third one, and this came out a while back, that's the Q1 advanced tax collection. Again, a barometer of corporate profitability. In Q1, FY26 had gone up by just 3.6%. Again, perhaps pointing to slower earnings growth across some of the key sectors. So that's just one watch point. Other than that, let's get to the flows then. The FIs yesterday net sold about 1,970 crore, while the DIIs pumped in close to about 771 crore rupees. Now, HDB Financial will be listing today. The question is the listing, the debut, going to be as blockbuster as the kind of subscription it's seen? It raised about 12,500 crore, but very strong subscription seen at nearly 17 times. Of course, we'll talk more about auto sales because not just the passenger vehicles, even Hero MotoCorp, for instance, came out with the numbers. And finally, as Surbhi was saying, India-US trade deal, progress on that will be center point. But Nigel, what are you watching?
Well, that's right. We look at the Troika and they are well behaved overnight. If you look at the dollar index, Brent crude prices, as well as the 10-year yield, Mr. Trump's behavior is debatable, but otherwise, these indicators are pretty much well behaved. Trump's taking on Powell, taking on Musk. So we'll have to wait to see what comes out with regard to a trade deal and how do we see the Fed action going ahead. But for the time being, that's in our favor. Let's move on to the next cue then. Yesterday, you had some kind of a long build-up on the Nifty Bank. And I think that's going to be in a trajectory of its own. So this is the one where I'll talk about a little bit more detail in just a bit. What do the FIs do? Well, they added longs as well as shorts yesterday. Mildly so, though. They added close to 2,000 contracts apiece, both on the long as well as the short side, though they continue to remain net short with more than 60% of their positioning on the short side. We look at it in absolute terms as well. Clients, mildly net long, FIs, mildly net short. And that's been the case for the last few trading sessions, though you would like to see some more shorts in the system, because in case we get a favorable deal or something on that front, then you'll have a bigger short covering bounce. For the time being, this is pretty much, okay, very okay-ish positioning that we're seeing from the FIs. 40,000 contracts is par for the course. 1 lakh contracts is something that the bulls really latch onto and they hope for some kind of positive news flow. Moving to the PCR, well, we had mentioned a couple of sessions ago, it was at around 1.25. That's cooled off to around 0.9 or thereabouts. So that's closer to the lower end of the range. While the options data should come up for you in this screen. Now, a couple of strikes. The 25,600 call, well, it's added close to 20 lakh shares. But on the downside, this 25,500 put as well added close to 37 lakh shares. So just punching in the premiums and matching them with what we saw on Monday with regard to a high as well as with regard to a low. That's the crucial level that I'm looking at. 25,670, very, very close to the highs that we saw on Monday. And going by the options data as well, that's the number you're looking at on the upside. While on the downside, this 25,440, which is closer to the low that we saw a couple of sessions ago. So that's going to be important. That's the broad range you're looking at. But the Nifty Bank, I think that's going to be the one that leads the Nifty higher. and coupled with Reliance Industries. And the last two sessions, that 57,100 mark has become the level that you want to go in there and buy. Remember, now there are reports that are indicating even for smaller banks, there's a good amount of demand. There's a divestment of IDBI Bank as well, dues, and it appears that the Nifty Bank is getting its act together. So with the reference point at around 57,100, that's going to be the driver from here on. Finally, the stock that I'm going to be looking at is Vedanta. You know, it's been holding and protecting that 20 DMA for the last many trading sessions. Today, there's a big cue that's coming in there because their demerger scheme is going to be heard in the NCLT. And if, in fact, it gets a green signal, then it's going to be very, very good news. If it doesn't find favor, then that's going to be a bit of a negative. But that's going to be the stock to watch for today's trading session. Let's see what the NCLT has to say, because we know there's a big value unlocking exercise that's currently underway.
Thank you very much for that. So let's get some global perspective and find out how investors are positioned on India. Prashant Baroda, Portfolio Manager, Emerging Markets at Allspring Global Investments, is now joining us on the show. Prashant, thank you very much for joining in. This is Reema here. You know, the last time we spoke to you, you were encouraged by the incremental good news coming out of China. Plus, there was a valuation difference between India and China. We discussed at length about India versus China. Where do things stand currently as we enter the second half of the year? How do you feel about India, and how might the Indian equity markets perform?
I think the Indian equity markets should continue to do well. We have to, I think the picture moves to just the earnings cycle now, and we'll wait to hear from commentary from the banks, the cement companies, and some of the sectors that have lagged this year, which is healthcare and IT companies as well. So I think the picture will get better as we move across the earnings cycle. But what's really good is at least the monetary cycle easing, inflation being under control. And now if we get some trade deal happening with the US and India, that will provide more impetus to the market going into the summer.
Prashant, hi, morning. So, given that equity markets are at elevated levels, almost at all-time highs in the US and India, how would you look at India amidst this context? Because the market, while it's done very well throughout April and most of May, now is the tricky part. Can the market rally on well beyond the previous all-time highs? What's your sense?
I think it will continue to chug along, and as earnings visibility will become clearer, even though some companies might disappoint in this quarter, the key will be the commentary they'll give going into next quarter as well. I think both US and India market continues to chug along, barring any tariff mishaps or, if there's no trade deal, which implies a 26% reciprocal rate on India. But if you think from a long-term perspective, both India and US have a lot to give and take. So US can supply India with energy, defense, and India itself with electronic products and auto components as well. So I think it makes sense for these two large economies to kind of work in tandem rather than have tariffs against each other.
Hi, Prashant. Good to see you in. So if you're allocating fresh money, then what would the allocation strategy be? First, between emerging markets and developed markets. And from the emerging market basket, how much does India get?
Sure. So I think if you look at what's happened from a U.S. perspective, clearly the U.S. has come back and still captures 60-70% of total global flows. But besides the AI story or the Mag 7 story, I think earnings on the U.S. Banks and others will be subdued going into later half of the year. So apart from the AI capex story, it's very hard to get excited about US markets. I think Europe will continue to do well. Within emerging markets, I think Korea and India continue to do well. China, I think a lot will depend on how real estate plays out in the second half of the year. If there is, I think the Chinese government has been resisting on doing big stimulus there and has been more restrained. So that will have an impact on overall Chinese story. But overall, I think we are very positive on emerging markets. Outside of US, I think both India, Korea will continue to do well.
All right, interesting. What about President Trump? Do you think we have seen peak Trump, or do you think that's yet to come? You know, first 6 months of the year have been a roller coaster ride, even the last 24 hours. I mean, he goes after Powell, talks about tariffs. Do you think we've seen the peak? Because the last time around, he went too aggressive. He had to actually pull back a little bit and cool his heels. Your take?
I think, the market has become more attuned to, the Trump administration functioning style. And one thing about this administration is that if they do kind of press hard, they do also pivot back as well. So they're not, as fixed to their viewpoints, and the market has attuned to that as well. So I think longer term, you have to be, with regards to Powell and Trump, you have to be sympathetic to both point of views. I think Powell himself said today that if it wasn't for the tariffs, he would have reduced rates, which I guess Trump is and the administration is pushing him to do. But I think longer term, the Chairman Powell is looking to see how these tariffs will impact inflation. And if, for example, the CPI continues to be range bound where it is now, we will see a rate cut cycle in the second half of the year.
How many rate cuts? And is it already in the price, or can it act as a positive trigger?
Well, I think the market is penciling in at least 2 rate cuts, but it might, I think the Chairman Powell might be more restrained, but he's also data dependent. So if we don't see a big inflation spike in sort of the next few months, I think we will get rate cuts from the Fed.
All right, Prashant, very quickly before we let you go, Powell's term ends in May 2026. And we'll be looking forward to the replacement. If the replacement is announced sooner than expected, do you think that will send a negative, another negative blow to the dollar index? Because a couple of experts overnight, I was hearing them, they were indicating that in case that replacement is actually announced ahead of time, we could see a further downtick on the dollar index. Your take?
Yeah, I mean, there might be a near-term impact, but I think longer term, you realize, the position of the chair of Fed, and we've seen RBI changes as well. Once you kind of take that chair and you have a dual mandate with this inflation and unemployment, you kind of focus on that pretty seriously and kind of try to make data-dependent decisions. So initially, maybe the market will be perturbed, but I think, again, it depends on who comes in and, how they kind of react with the market at that point of time.
Prashant, so just to recap, your order of choice between markets would be US first, then India. I mean, just recap the preference order for us.
Yeah. I think US, Korea, and India. I think Korea, what's happened is we have a new government that's kind of focused on improving corporate governance reforms there. Valuations are a lot lower, and they might even think about doing some sort of fiscal stimulus spend. But India as well, I think, is one of our kind of top 3 markets when you look from allocation standpoint.
Okay. All right. Got that. Thank you very much, Prashant. Good perspective. Nice speaking with you this morning. Thank you for joining in. Well, that's a view coming in. Thanks very much. That's a view coming in from Allspring Global Investments. Let's quickly move on and tell you what else we have lined up for you on the show. Well, at around 8:35, we'll be speaking with the management of MapMy India as it wins a 233 crore contract from an international corporate client for map data licensing in India. At 9 a.m., we'll have Rishi Vora of Kotak Institutional Equities joining in to talk about the auto sales numbers and what does the month of June really tell us in terms of the picture. Rahul Arora of Nirmal Bang Institutional Equities is our market master of the day. He joins in at 9:20. At 9:30, we speak with the management of Apollo Hospitals to talk about the big restructuring, complete corporate restructuring. Will it generate more shareholder value? What are the business growth aspirations looking like right now? We are in conversation with Mr. Reddy at around 9:30. After that, Suyog Kotecha of Aarti Industries speaks to us about the company's FY26 business outlook. That's Aarti Industries in focus. At 9:50, we touch base with the management of Mahindra & Mahindra, talk about their auto sales numbers for the month of June. And today, in our special segment, It's the Economy, Lata will be in conversation with Ajay Srivastava of Global Trade Research Initiative and S. Ganpati of Gokuldas Exports on the likely options for exporters from the 9th of July.
Time to slip into a short break. A lot of stock-specific action to track for you. Get to that in just a bit. For the time being, I give you a sneak peek into the list. Hero MotoCorp, Hyundai, Lloyds Metal, MOIL, JSW Energy will be reacting to positive news flow. We have 5 apiece, pretty much even Stevens today. Maruti, Asian Paints, V-Mart Retail, NMDC and Dreamfolks will be reacting to negative news flow. Get into that break. Come back. We'll get into further detail on all of these names.
Welcome back. Well, let's now talk about a lot of the individual stocks. And before we do that, let's take stock of the Asian market update as well. Like we've been saying, it's a pretty mixed picture. The market that's reacting negatively to obvious comments from the US president is Japan. It's down about 1%. Hang Seng's still okay. So mixed across Asia. Let's get the implied open up to get a sense of where we could be. We've been stalling around this 25,500 mark for the last 2-3 sessions. Will today be any different? We'll find out. 40 points up as far as the implied open is concerned. Well, lots of stocks to track as well. So let's straight away get to our team with the CNBC-TV18 list of top stocks to watch. First up, more auto sales numbers trickled in after market hours. There was Maruti, there was Hyundai, and I think Hero as well. Yeah. How do they look, Prima?
So let's start with Hero MotoCorp. Better than what the street was anticipating on account of rural growth, the pickup. So overall sales in the month of June up 10%. Higher than expectations of 6%. So Hero MotoCorp was a beat. But on the flip side, Maruti Suzuki was a miss. Again, it's the same issue. The domestic sales are weak because of challenges at the entry-level segment. Exports are doing fine. But on the whole, entry-level segment sales are down 18%. UV sales are down 9%. And as a result of that, the domestic sales are down 12%, while exports are chugging along well, 22% up. Hyundai was largely in line with expectation. The total sales was down about 6%. Expectations were for an 8% fall. Exports are doing well, but again here, the domestic sales have been weak. So 12% lower for the domestic sale. Exports have done well. So to just recap, Hero MotoCorp positive, Maruti was a miss, Hyundai was weak, but in line with expectations.
All right, thanks a lot for that, Rima. Well, let's hop across to Mangalam. Mangalam, tell us more. Yesterday I heard a nice tune that you went with Mr. Jindal. And paints are in focus yet again. Asian Paints today, not too great news. V-Mart Retailer as well, a little bit of a miss.
Well, Mr. Jindal actually sang the Dulux tune, but more on that later. No. Now we talk about Asian Paints. What actually has happened is, remember that, Birlas had approached the Competition Commission alleging, use or abuse of dominant position by Asian Paints in the market. To that, the Competition Commission has released its first report, and they've ordered an investigation against Asian Paints for the abuse of its dominant position, and this probe will complete in 90 days. So post 90 days, we will have an order that will come by from the Competition Commission, where Aditya Birla Group had written to the CCI in November 2024 saying that Asian Paints is disturbing the dealers which are dealing with Grasim products. So we'll keep an eye out on that. Until there is clarity on this one, expect some subdued movement on Asian Paints on the back of that. V-Mart Retail, on the other hand, it is their first quarter update that has come in. The sales, not a problem, nearly 13% higher at 885 crores. The problem was the same store sales growth, which is coming at just 1%. On its part, the company has said that, because Eid was in the previous quarter this year and the base quarter had Eid last year, if you adjust for that, the actual same store sales growth is up 5%. But be that as it may, the street will not like just 1% sort of same store sales growth, because a large part of the festive season growth was also accounted for in the previous quarter already. They opened 15 stores pretty much in line. So see mild red for both V-Mart and Asian Paints.
All right, Mangalam, thanks a lot for that. Well, let me run you through all the metal stocks that I'm looking at. NMDC, yesterday there was negative news flow because the price cut that came about effective July 1st was larger than expected of around 500 to 600 rupees. The street would have liked a number of from 200 to 300 rupees per ton. Now, going with a little bit of red out here, though yesterday the stock ended virtually at the low point of the day because production has gone up, but sales have come down. Now, this makes the next few quarters quite challenging as well. So we'll have to see how that goes. So, that's going to be one that we're going to be looking at because for June, the sales have come down by close to 4%. Could have been impacted by the onset of the monsoon sooner than expected. So going with red out there. Lloyd's Metal, the iron ore production actually is flat at around 4 million tons, while DRI production is up close to around 3%. More or less in line, no big surprise out here, but going with green out there because since they've done 4 million tons of production just in the first quarter, and now they've got the EC clearance, which they can do close to 25 million tons in the year. For the next few quarters, you could have a bit of a softish monsoon quarter as well, but post that, they'll be ramping up, 6 million tons on a quarterly run rate. So that's why going with green on Lloyd's Metal, though it could be a flattish reaction. And MOIL, it by the international trends with regard to manganese ore prices, and they've affected a marginal price increases on a couple of grades out there by around 2%. So that's why going with a tinge of green on MOIL as well. But going to Vinny, she is here because she's tracking JSW Energy and Dream Folks. Morning, Vinny.
Good morning, Nigel. So JSW Energy, positive news flow after the company has signed a battery energy storage purchase agreement in Rajasthan with RVUNL. And now this agreement is to establish 250 megawatt of standalone battery energy storage system. So positive coming in here and green is what we're expecting. Now Dream Folks on the flip side, red is what we could see coming in for the stock, a sharper fall, given that the company has now said that certain programs or certain agreements with Axis Bank and ICICI Bank have been closed with effect from 1st of July 2025. They said that the overall contracts are still on with these two banks, but there are certain important programs which have been shut down, and this could have some bit of a material impact. The exact impact is what they are still calculating in terms of on the financials, but some impact is what is expected. Do not forget, on June 20th, the management actually spoke to CNBC-TV18, and they said that all their contracts were in place as of June 20th, and renewal and negotiations were a part of it, and they were sticking to their growth guidance as well. So now it will be important to see how their guidance will change and what is the impact of this. But red is what we could see coming in, given that these two are big clients for the company.
Okay, all right. So we're going to watch for Dream Folks for sure. Thank you for that, Vinny. Let's quickly recap our list of stocks to look at today. The ones that have positive news flow around them are Hero Moto, Hyundai Motor, Lloyd Metals, MOIL and JSW Energy. Stocks with negative news flow would be Maruti, Asian Paints, V-Mart Retail, NMDC and Dream Folks. All right. With that, let's take stock of what's happening in the commodity markets as well. We have Manisha Gupta joining in as always with the latest. Manisha, good morning.
Morning, and thank you for that, Surbi. I'll start with the crude oil prices, which are holding their gains ahead of the OPEC Plus meeting, which is on 6th of July, with an expectation that this would be a fifth straight month for the month of August that we will see increase in production from OPEC by 411,000 barrels per day. Well, the geopolitical tensions have eased as Iran-Israel holds ceasefire, but there is still a lot of uncertainty over the July 9 deadline for tariffs, and that continues to keep the markets choppy. Having said that, we also have seen not just the gains in energy space, but the precious metals overnight also have gained. So you have gold and silver both gaining by more than a percentage point. The US dollar trading at around 4-year lows clearly has been supportive for this one. In the metal space, it is copper which continues to outperform. While we have seen zinc, aluminum, copper, all of these metals gain for the month of June, July as well has started on a positive note, especially for copper, which is trading at a 3-month high. Well, here as well, the weak US dollar, tight supplies, inventories declining, and expectation of a China stimulus measures are some of the supporting factors.
Okay, all right. Thanks a lot, Manisha, for joining in and filling us in with all of those cues. For the time being, we slip into a short break. On the other side, the management of MapMy India Maples will be joining in to talk about the recent order win. We'll also get some fundamental stock talk with Deven Choksi or DR Choksi FinServe. Stay with us.
Welcome back. U.S. markets had a mixed finish. The Dow ended higher, but we did see some cuts coming through on the Nasdaq. The Nasdaq ended lower by close to about 0.9%. You know, one of the reasons what led to the AI sell-off yesterday was as a part of the big, bold, beautiful bill, there was an AI regulation. And the Senate voted 99-1 against it. So basically, that AI regulation clause said that individual states in the US can come up with it barred individual states to come up with their AI regulation. So basically, the government wanted that at the federal, right on top, the central government or the federal government will be the only ones able to decide on the AI regulation. So that was what was put in the clause. But the Senate voted against it. So now basically what this does is that individual states, Texas can come up, Texas can come up with its own AI regulation. California can come up with its own AI regulation. So it's just going to increase the complexity and uncertainty. And that's the reason. So this happened yesterday when the Senate voted 99-1 against barring
regulation of AI,
barring states from coming up with their own AI regulation. And that's one of the reasons why the Nasdaq sold off close to about 0.8%. But let's pull up Asia this morning. Hang Seng was shut yesterday. So Hang Seng, I think, is a gain of close to about 0.5% as it begins trade with. But the Japanese markets, where there are a lot of question marks surrounding the deal, whether the Japanese-US trade deal will go through, what happens to rice, etc. Nikkei is the one selling off sharply. That's down nearly 1%. But let's invite the first corporate on our show now. Digital mapping firm CE Info Systems, Map My India, secured a licensing contract worth about 233 crore rupees from a private sector international client. So to talk more about this and the growth outlook, Rakesh Verma, co-founder and CMD at Map My India, is now with us on the show. Mr. Verma, thank you very much for joining in. This is Rima here. Before we get chatting about the order win, just a couple of about 2-3 weeks back, we had a very large transaction in the company where we believe PhonePe sold about 5% stake in the company. Tell us the reason behind, because they've been an early investor in Map My India. They sold a large 5% stake. They still hold 13-14. But what was the reason, and are they planning to sell more?
Well, any investor has a freedom to buy and sell. That's the beauty of listed companies. Coming to PhonePe specific, well, they have been an investor since 2015. We all know that they're going through their IPO process. And for that, they had a need to exercise this option to sell some shares. So we have no company has any control over such issues. There is no issue with them. They are very happy and they have made tons of money.
Sell more? And did the promoters consider buying when PhonePe was selling?
Well, promoters don't have that kind of money to invest in and keep buying. We are happy maintaining a 51% majority stake, and that's what we want to stick to.
Just to close the loop on this, sir, they had close to 18.5% in the company. They sold 5%. Any indications from them that they will be looking to sell the remaining? Because, if there's no conversation, that continues to remain as a bit of an overhang on the stock. So have they communicated anything that they're now done for the time being? I understand that. And communication is always there with PhonePe. They are very good partners too. They're also our customers, remember. First is they have a 90 days lock-in in any case. They can't sell for 90 days. Beyond 90 days, I think if they have gone through the process of DRSP and all, it's not that they're in a hurry to sell. It's just some of their requirements. But if they sell, I have nothing to comment on it. If they don't sell, still I have nothing to comment on that.
Okay, so you only have an indication.
I understand the overhang.
Okay. So you only have an indication, but you cannot confirm whether there will be no further stakes by PhonePe, right?
They are also part of Walmart. I hope everybody knows.
Yes.
So they cannot go and make a statement of any kind this way or that way. This is what their CEO told me.
Okay. All right. Thanks for sharing what you know on this. It kind of gives us some sense of clarity at least. Now let's come to the order win as well, sir. This 233 crore rupee order. Where is the client from? What industry? Tell us a little more about the margin profiles of this order. I think you have stated your intent of being a 35% EBITDA margin in the past. So, I mean, how does it lead into that target?
Well, all the orders that come to us are of different nature. We have given the clarification in the stock exchange that it's a map data licensing. And typically, any map data licensing, when it happens, it has a huge margin because it takes full advantage of the operating leverage. So an order of this kind results in, if I can say, approximately 60% margin. I will not be offline.
Okay, and the client, I mean, local, global, if you could give us some more color.
Again, we have, in the filing, we have said it's an international customer for India market.
Yeah.
Now, under the contractual obligation, I cannot disclose the name of the customer.
All right. Sir, if you could just confirm a couple of details. What will the revenue recognition of this particular 233 crores be? How much in this year, how much in the next? And just want to reconfirm, what did you see on margins of this particular order?
As I said, 230 crores is over a period of 7 years, starting from year 1. So divided by 7, 33 crores, that's what it comes out for every year. Margin, I just said that for this kind of an order, it's not an order by itself. It's a kind of a business that we are in where we try to fully leverage on our map data product and platform. And that creates a margin of the nature of 60% or so.
What percentage of your revenues or order book would come in from such kind of deals, licensing deals, where you enjoy margins of 60%?
Well, I think a year back or so, we had talked about the Hyundai Kia 400 crores, right? Now we are talking about this. And there are certain more orders that have happened. Those orders do give us a large margin of the nature I told you just now.
All right. Very quickly, sir, you've highlighted that government business will be one of the growth drivers. Just quick analysis. What is the margin difference between government orders as well as non-government?
Government orders, we, at least at this point of time, but in future it may change with our products becoming more mature for the government also. So at this point of time, I'll say a 20% margin on the government orders is what we look at.
And what will the government contribution stand at as we close this year? Because it's been going up.
Yes, it will go up. But the last year, I think we had around 10% or 12%, something like that.
Okay, got it. Thank you very much, Mr. Verma, for joining in. That's MapMy India for you. Deven Choksi is now with us, joining us on the show. Deven, thank you very much for joining in. Let's talk about Asian Paints and the CCI order. Just when things appear to be perhaps bottoming out for Asian Paints, analysts had started turning bullish on it, saying valuations are more than 1 times below, the long-term averages. We've got this CCI penalty now, the CCI order. Do you think it's going to be a big negative overhang, and how will this play out?
Yeah, good morning. Well, when you are an industry leader, when you are controlling 1/3 of the total market in the industry, and obviously, I think when the competition is increasing, all kind of situations would arise. I think one which we are probably seeing. But that is not taking away the long-term prospects of this particular business and the company's capabilities as well. They have been in this business for a long period of time. I think out of the total home decor business of about 150,000 crore in the country, if the paint business is commanding about 90,000 crore kind of a total size, and of which I think if Asian Paint is 35,000 crore kind of a company, obviously I believe that I think the kind of challenges would come to them, but I think this company is very integrated to meet these particular challenges. So I don't think that takes away the prospects as we see it today. On the contrary, current year appears to be more promising on 2 counts. On 1 count, I think the raw material, the input cost is remaining under control, so which is giving the promise for better margin for the sector as a whole and companies like Asian Paint in particular with a large capacity that they have. And on the other side, I think the re-rating of business is now started to happen, because of the previous fall in stock price. I think again the stock price started becoming slightly more stable and it could have re-rating. Also because of the fact that the business conditions improving on the other side. So we remain cautiously optimistic about the prospect going forward for the company. Maybe a small hurdle at this point of time on the CCI order.
Not sounding too perturbed, Devin. That's interesting. And so CCI order is one aspect. The other is a larger question on, is the worst over for the paints industry? Just comment on that as well. I mean, we've seen how things have played up. The Birlas are there, JSW is there. Axo Nobel has been snapped up. Too much has been going on. Is it time to start buying paint stocks, or do you think we will probably see a little more of a price war perhaps till things stabilize?
I think initial phase would be of taking some amount of market share is something which one cannot rule it out. And that's where more than the price war, I think they may probably end up giving more amount of incentives to the retailers from the point of view of, I think, cornering some part of the market share. And that is understood. Now that hurts the domestic, the newcomers in more than I think the existing one. Largely because of the fact I think that they would be initially as past 4 or 5 years, I think they will be having a situation of bleeding in the business. For JSW, I think the situation will be slightly different because ExxonMobil is already established with around 50 to 55,000 crore distribution, 50 to 55,000 distribution points that they have already established, and the business is profitable. But for Birlas, I think it's going to be a tough situation as we see it. In my viewpoint, I think more than the price pressure today, I think the requirement should be how the market is going. And that's what I think one would keenly observe here. We see in next 10 years' time, the size of the market growing from 90,000 crore to somewhere around 150,000 to 170,000 crores. So obviously, I think the kind of overall paint business is growing from current levels to, I think, almost double in next 10 years' time. So we remain relatively more optimistic about the possibilities going forward.
All right. Hi, Devin. Good morning. Dream folks, that's going to be a stock in focus because certain programs of ICICI Bank and Axis Bank have been discontinued, and they're saying the impact is going to be material now. The stock, as it is on this fear, had pulled back, I think, close to around 15 to 18%. What's your view? In all probability, it starts off in the red. Will you look to buy, or will you say there's too much of skittishness out there, too much of uncertainty? You rather just stay away.
Good morning, Nigel. I think disintermediation in this business, I think, is something which one probably is asking for. I don't think that I think the aggregator model on which this company created, I think, a significantly large presence works after a while, because once I think the bank partners who are basically also having an equal amount of penetration ability and through the use of technology, I believe, the fintech platform in particular, I would think that I think they are basically going to create their own presence, significant presence on their own. And that's where I think even the margin related question would come, that why should one pay for an aggregator, whereas I think one can use the technology, leverage the technology and go to the last mile as far as I think all the airport and the lounges are concerned. So in my viewpoint, I think that's going to happen. The disintermediation, as we call it, as is happening right now. Not too sure how exactly Team Fox will probably reshape the business model in the current situation. So till the time clarity emerges, maybe not enough confidence to look at this particular business.
Okay, so yeah, Dream folks, let's see what the market reaction is going to be. The thing is that the fear of this happening had been there in the market. So has it already played out in the stock price? Will we see further damage today? Let's see. We've reached out to the company for clarification. Let's see if they're willing to offer one. Auto sales, Devin. I mean, obviously, it's the same picture, right? Very sluggish on passenger vehicles. M&M continues to perform very well. Bajaj Auto has been lagging last couple of months. It's not just the June numbers now. Autos. Are you buying any stock? What would be your picks?
Yeah, I guess I think the individually companies have to be looked into. Bajaj Auto's case, fortunately, I think the three-wheelers and the EVs have picked up well. Though the two-wheelers haven't done enough, I think, in the domestic market particularly. So that is a lag as far as I think the business is concerned. Mahindra is a different story altogether because every successive model that they've been launching, they've been collecting bookings in advance for 1.5 to 2 years at least. And that's where probably I think the company is having relatively more clear visibility as far as the business is concerned. Uh, as I see it, I think the current year appears to be more promising on the new vehicle segments. I think particularly the buying of new vehicle segments, largely because of the disposable income increasing the hands of the people, and at the same time cost of fund coming down due to the fall in the interest rates. Given that situation, I would think that somewhere from the second quarter after, once the festive season starts, probably we are likely to see the better numbers coming up from autos. July to September, I think we are not expecting too big a growth as far as numbers are concerned. So can safely say that beyond first half, the second half should remain relatively more stable for most of the good companies in the auto space.
Okay. RBL Bank, that's been a stock on fire. I think 4% up yesterday, 21% in the last 1 month. And since the beginning of the year, 65%. Now there are reports which suggest that Dubai-based lender Emirates NBD is exploring a significant minority stake in RBL Bank via primary capital infusion. Your thoughts if this transaction were to materialize, and even outside of that, fundamentally, how is RBL Bank positioned at this juncture?
Well, the challenges would continue because I think you are competing with the larger companies who are equally strong with their presence and using technology at the core level. So from that perspective, I think the challenge would continue. But yes, in the banking business, I think the growth would also emerge in along with the technology when you strengthen the balance sheet. In this case, I think the balance sheet strengthening activity is appearing to be more promising. And that's where probably I think with the technology front end, they could possibly get some of the lost market share. As such, I think whatever the repairing of the balance sheet had to happen, I think is completed, I believe. And as a result of which, I think the future years will appear relatively more promising. I believe the market is having that kind of optimism at this point of time. That's where I think the stock price is getting reflected into. In my viewpoint, I think selectively one can look at, I think, such kind of opportunities.
Interesting. All right. Deven, I wanted to ask you about Adani Ports. We have got the June update that's come in there. And the growth that they've delivered is around 12%. It just hit the screen, actually. For the first quarter, it's also up by close to 11%. The guidance, remember, they had given was around 505 to 515 MT, which compares with around 450 MT in the previous fiscal year. So it appears that they're on track. What's the view on Adani Ports?
Yeah, Nigel, I guess I think apart from volume, I think the value realization is equally important because I think the cargo handling and the mix of the cargo handling resulting into better yield is something which one is asking for on a per ton of realization. I believe that I think two factors are working in favor of the company. On one side, due to the automation, the cost factor is coming under control, and as a result of which it promises to add into the margin. On the other side, I think the yield is improving, and as a result of which, I think on a 10-12% kind of a volume growth, we are talking about a slightly higher yield compared to what one has seen in the previous year because of the mix as well. So in my viewpoint, I think this remains absolutely very promising. This business is a cash-generating business, and obviously, I think you are going to see a larger amount of growth also through the inorganic acquisitions. And the ones that they have acquired, I think they are likely to start contributing in coming year and quarters as well. So we remain distinctly optimistic again, I think, for the business per se as a whole. Any corrective price, I think, would be a better opportunity to add into the stock.
Deven, thank you very much for joining us this Wednesday morning. We'll get into a break. On the other side, we'll address the market technicals. Sudarshan Sukhani and Mitesh Thakkar join in with their technical trading ideas. Stay tuned.
Welcome back. You're tuned in to Bazaar Morning Call. You're on CNBC-TV18. Well, let's get straight to our technical experts. Sudarshan Sukhani and Mitesh Thakkar join us this morning. Good morning, gentlemen. Thanks a lot for joining in. Well, Sudarshan, you go first. Last couple of days have been more or less sideways, not moved too much, but the bias appears to be on the positive side. For the time being, the GIFT Nifty is suggesting we have a 25-30 point uptake. What would you do?
Yeah, good morning. See, you're quite right. The bias is on the positive side. We are at a strong uptrend, but within an uptrend, there will be periods and protracted periods when the markets do nothing. That's normal. I mean, the market is not expected to go up day after day, hour after hour. That doesn't happen. All of us know it. So we are now probably in a phase where the markets are entering into a consolidation. Within this consolidation, there is one trade. On any day you see a 150, 200 point dip, go and buy that dip. If that dip doesn't come, if the markets decide to go on the upside, then we miss that trade. Because that is a high risk trade. The low risk trade is to wait for dips and go long.
Okay. Mitesh, what have you made of the consolidation over the last 2 days? Is this just consolidation in an otherwise bullish structure? And how would you approach the index today?
Good morning. I have been calling for some kind of consolidation because one, after the rally, we had the hourly charts and 2 hourly charts in overbought situation. Also, there was a gap, around this levels of 25,690 to about 25,750. I think that still remains. So maybe in the next few days, you will see the markets being subdued, the index being subdued, but these stocks should do well because the overall trend is on the positive side. Now, on the index, if somebody wants to trade, wait for an intraday dip, get closer to about 25,450 or levels. That's where you want to enter with a 70-80 point kind of a stock.
Okay, all right. Let's talk about individual stocks then. Mitesh, you go first.
Yeah. I have all buy calls today. Good morning, Naju. I have buys on Bank of India with a stop at 119 for targets of 127. Couple of names which have joined the F&O series now. That's Blue Star is a buy with a stop at 1675 for targets of 1760. Amber is a buy with a stop at 7020 for targets of 7250, and a buy on Biocon with a stop at 356 for targets of 375.
Okay, all right. Blue Star, that was an interesting one yesterday. Big movers what we saw. But Sudarshan, coming across to you, what's on your radar?
Well, GMR Airport is a buy with a stop under 84. Gujarat Gas is a buy with stop under 470. Vedant is a buying opportunity with a stop under 457. And finally, APL Apollo is a buy with a stop under 1650. APL Apollo has gone through a very decent correction and is a positional buy.
Thank you, gentlemen. We'll chat with you through the day. For now, it's time for a short break. We'll come back with the pre-opening rates. We'll also be joined by Rishi Vora of Kotak Institutional Equities to discuss the auto sales numbers for the month of June.
Welcome back. About 15 odd minutes left before we start getting our pre-open rates. Let's pull up the Asian indices. Again, the picture has been fairly mixed across Asia this morning. We've been saying that some of the markets like Japan are down. Hong Kong is managing a little bit of a gain for now, actually looking better than before. The implied open was telling us that we'll get about a 40-point pop. Now we'll have the pre-open anyway, but that's now a 50-point open. In a little while from now, we'll start getting in our pre-open rates. And obviously, the pain space is going to be keenly watched once again. Let's see what happens there. By the way, there's news that's coming in on RBL Bank as well. In a bit, we'll have Lata join in. Reports seem to be indicating that there could be a foreign bank suitor in the fray for RBL Bank. But the question is, how close are we to a deal? Will there be a deal, no deal? And what do the current regulations say? I think Lata will join in. Do we have her? I don't think we have her right now. She'll join in on this in a bit. RBL Bank up 4.5%. That's, of course, yesterday. We'll see if it has any follow-through today or not. The other stock to keep an eye out on is, of course, Dreamfolks, and we've been pointing that out because the company has said... Now, here's the technicality and the interesting aspect. The company said that their contracts with ICICI Bank and with Axis Bank are not over. The contracts are still in place, but the current programs that they were running with these banks with respect to the cards and the airport access, etc., the lounge access, some of those programs have been, wound down. The question is whether that means an end of all association, whether they'll manage to retain, big banks like ICICI as clients at all. The company has acknowledged that this will have a material impact. So that's, again, a watch point. So these are some of the names that we are looking out for very, very specifically this morning. Otherwise, I mean...
the company, I think in the clarification, did say that the contracts with the banks remain active.
Yes.
So it's not a complete exit, but certain programs seem to be deactivated. But that said, the certain programs are going to have material in nature. And the stock itself, I think, is down, what, 40% now from the start of the year. And from its 52-week high, the stock has corrected close to about 55%. The 52-week high was 522, hit in September of last year, and now the stock is down to 230. So that's going to be one stock to watch. And Hero MotoCorp in pre-open is also higher. So that's up nearly about 2% on the back of the sales numbers. But let's talk about RBL Bank. That's in focus because news reports suggest that Emirates NBD Bank is eyeing minority stake in RBL Bank. Lata joins in with the details of on this likely development. Lata?
Well, the report says that NDB Bank will be buying a minority stake in RBL through a preferential offer to which it will subscribe. Now, we already know that NDB's board has permitted the bank to raise 3,000 crore, and NDB on its part has, NBD on its part has a banking license, which it is implementing through a wholly owned subsidiary and has 3 branches. So in a way, its fit and proper has been already done by Reserve Bank. They've got a banking license. Now, it seems to be that the news is brewing for a while because look at RBL Bank's shares. They have moved from 160 rupees in April to 260 as of closing yesterday. And I mean, you can look at the way it has risen. June 5th, it had gone to 206. That's a big jump from the April levels. And from 206 to 260 is also a very big jump in a couple of weeks. Now, RBL Bank's shares, let us look at NBD's position. NBD is known to be looking for a stake in some Indian bank. We know that they are very big, they were interested in IDBI Bank as well. And the whole catch is what will be RBI's position. The RBI's rules are this way. You have to take permission when you get 5% stake, when you get 10% stake, and when you get 15%. 15% is the maximum any foreign entity can have, or any entity can have, in a bank. Over and above that, it is only exceptions, and it has been granted in, I can say, 2.5 occasions. One was when Fairfax got the permission in CSB, Catholic Syrian Bank, 51% stake, but only 26% voting rights. Likewise, LVB got sold to DBS Bank. Again, there it merged completely with DBS, so none of these rules apply. And finally, there is SMBC waiting to take a 20% stake in Yes Bank. We haven't yet got the official nod from RBI, but the way it's going, it looks like they have some kind of an informal nod. And chances are that looking at the SMBC instance, NBD has been emboldened to perhaps start some negotiations with RBL Bank. But RBL doesn't have a single seller, like in the case of Yes Bank, where State Bank was holding that 24%, and it was very awkward for Reserve Bank to give one bank 2 licenses. SBI operates as SBI, SBI operates as a 25% holder or 24% holder in Yes Bank. It always had to come down. So there was a constraint on RBI to give that permission. There is no such constraint in RBL. So will RBI make an exception at a time when, there is no problem with the bank? Why have a rule if you're going to continue to give exceptions? That could be one way of looking at it. RBI governor has said in an interview that they're reviewing the entire ownership structure, but that's nowhere near fruition. It's a thought. So will they wait for that? Or will NBD not get into all this? Will it only apply for 5%, in which case, it can get 4.99 is always available. So we don't know. All options are on the table. The story says 15 to 20% following SMBC. That will require Reserve Bank to make a very big exception for a healthy bank. We will have to wait and see. Okay, by the way, we wrote to Reserve Bank and to RBL. We are still awaiting a reply.
All right. Okay, Lata, got that. Thanks very much for putting the story in context. Let's see which direction it actually moves in. Well, for the time being, we'll shift the spotlight on the auto space. The auto sales that have been coming in for the month of June have been a mixed bag once again. Let's discuss the trends and what we should be doing as investors with Rishi Vora, analyst at Kotak Institutional Equities. Rishi, thank you so much for joining in. So it's more of the same, right? I mean, you have the winners that continue winning, for instance, M&M, and M&M is doing so well on all its fronts, passenger vehicles, even tractors. Aisha's numbers have started looking better over the last couple of months. But the sluggishness in four-wheelers, I mean, there's just no departure from that. Whether you look at Hyundai, you look at Maruti, mostly anemic numbers. Your thoughts? Let's start first with passenger vehicles. Do you see any light at the end of the tunnel? Do you like any PV stocks, barring M&M?
Yeah. Good morning. You rightly pointed out that passenger vehicle volumes, at least the retail trends, have been sluggish for last couple of quarters, and partly to do with base. But we believe that this trends, at least till festive, will continue, where we might see a low single digit to a flattish growth. Just during the month, obviously, the wholesale volume decline was on the larger side. It's predominantly for Maruti. It was driven by plant shutdown, so that had some impact. But yeah, retail sales, I think at least till July, August, we don't see that recovering. And around the festive time, with whatever the central government and RBI has done in terms of income tax cuts, CRR cuts, we do see some recovery. But again, it would be more around the festive period. And also, one of the peculiar behaviors which we have observed at least lately is there is like bunching up of demand that happens where during festive the demand is much stronger, and in the non-peak or non-festive periods, the demand tends to remain muted. So that's how the trends have been. Consumers do wait for attractive offers, and that's when we see bulk of the demand coming through. So yeah, it's a bit like lumpy in terms of demand coming back and then slowing down. So I think these are the trends we'll see. Hoping for a decent numbers at least during second half. First half might still be overall a low single-digit growth for the sector.
Rishi, but I think in the first quarter, passenger vehicle sales on an average were down 6%. Is that correct, Q1?
No, it would be, let's say, a flat marginal decline, not a mid-single digit, but a low single-digit decline.
A low single digit. So that's for Q1 passenger vehicles, down, say, -2-3%. Yes. And for the full year, though, you're clocking in a growth of?
Let's say the industry expectation is around 1 to 2% growth, and we are around 3% growth at this point in time.
Got that. What about the trends in two-wheelers? And your thoughts on the anti-braking system, if it does get implemented next year? How will it impact? Who will it impact?
Sure. Again, two-wheeler, let's say if I look at first quarter numbers, the retail trends have been, again, mid-single digit to low single digit kind of a growth. So again, over there also things have slowed down post-festive last year. And part of the reason was the motorcycle segment was not doing well. May was a good month because of a strong wedding season, but again, June has again slowed down a bit. So again, similar to passenger vehicle segment, our expectation is that second half we'll see some bit of growth coming back to mid to high single digit. Over here also, we are working with 6% growth for the industry for full year versus industry guidance of 6 to 8%. ABS norms, if it comes through, obviously it would be a significant impact for the industry. Today, around 16% of the two-wheelers have ABS and 84% of the two-wheelers don't have ABS. So that 84% has to shift towards ABS from 1st January 2026 as of the government's draft notification. It's a significant impact. There can be around 3 to 5,000 rupees of cost increase in terms of percentage, anywhere between 5 to 8%. So that's a big impact for the industry. And in terms of OEMs, I think Hero gets the most impacted as 94% of their portfolio will have to shift, followed by TVS, where the impact on the portfolio would be around 64-65%, and then Bajaj Auto, which is around 35%. Royal Enfield, there will be no impact because all their models are today equipped with ABS.
All right, so two-wheelers could get knocked in, Rishi, but what about who benefits? I think Endurance is a probable candidate. Could you list out the beneficiaries and how big is this for them?
Sure. So roughly, if you look at it, there are three players today in the market, which is Bosch, Continental, and Endurance Technologies. Bosch is the leader with almost more than 60% market share. Again, the business sits in the unlisted arm. So today, the Bosch India listed arm may not get the complete benefit of it at this point in time. Endurance roughly is around 10 to 15% of the market share at this point in time. As I told you, right, 16% of the two-wheelers today has ABS, 84% needs to shift. So almost the industry or ABS industry size will almost increase by 5x. And obviously all the players will get benefited out of it. The question is, the problem can be that, in the near term, we might find, or let's say supply can be a constraint, and whoever adds the capacity at a faster pace may benefit out of it. So obviously we need to see the plans of all the ancillaries. But yeah, these are the three major players who will benefit if, ABS storm comes in.
Bosch, Continental and Endurance, though Endurance has a smaller share of the ABS market. Got that. That's really helpful information, Rishi. So final, quickly, I mean, we're getting into market opening. What stocks to buy? From a 12-month perspective, if someone were to ask you your top 3 auto picks, what would they be?
We continue to be selective at this point in time in the space, given the trends which we are seeing and the valuations. But yeah, as first thing you mentioned was M&M. So that continues to be our top pick. Followed by Hyundai Motors and then Maruti. These are the 3 names we like at this point in time.
Oh, really interesting. So Hyundai and Maruti playing for that turnaround, perhaps, maybe around the festive time. Got it, Rishi. Good conversation. Thank you very much for joining, and we look forward to more of these in the coming weeks. Well, with that, let's quickly get back to our technical experts. Look at the 9-10 calls. The pre-open has settled. Nifty up 46 points in the pre-open. So, Darshan, what would your call be?
Well, it will be APL Apollo. Buy APL Apollo with a stop under 1650.
All right. And Mitesh, what about you? 9-10 call?
I'll go with a buy on Amber for targets of 72.50.
Oh, Amber, you said?
Yeah.
Amber Enterprises. Got it. All right, gentlemen, thanks very much for the trades. Let's quickly move on and address the standout brokerage report of the day. Nimesh is here as always with it. Which one is it and which stock, Nimesh?
Hi, sir.
Good morning.
Sir. Today's standout is on Tata Communications. Macquarie has put out a note. They have initiated coverage on the stock with an outperform rating and a target price of 2,300, a meaningful upside from current levels. But interestingly, they see the stock can double in 3 years in a bull case. Now, what Tatacom does? Tatacom is an enabling digital transformation for enterprises. For the world's largest digital initiatives, or for that matter, digital pipeline network. In fact, they see optionality in the growing digital services space where the company is a market leader. Now, the problem for Tatacom was their ROIC has fallen from an average 16% in FY21-23 to almost 11% in FY25, largely on back of acquisitions. And Macquarie says, assuming there are no further acquisitions, this ROCI can again come back to more than 20% by FY28 and gradually move towards the company's target of 25%. So that's the key thesis on which they've initiated coverage with an outperform rating and a target price of 2,300 on Tata Communications.
Okay, all right. Thanks a lot for that, Nimesh. Well, let's go back to Mitesh and just get a quick view on this particular name. Mitesh?
I think there's really, some big movement happened yesterday. The stock had broken its 200 average and was consolidating. It made some kind of a triangle consolidation on the hourly charts, and yesterday gave a breakout. Now, this breakout suggests a first target of around 1,800. But logically, this could even stretch to about 19, 10, 20 level. So I think that's the minimum target I would look for from a trading point of view.
Okay. All right, Mitesh. Got that. Thanks very much. Let's take a look at, stocks that are on the move. Let's look at DreamFolks, actually. It's down 3.5% on my screen, showing down 3.5%. And that's exactly what we were discussing, that A, this has been in the market for a while, this buzz, that there's some trouble there with their contracts with ICICI Bank and Axis Bank. And B, the company is maintaining that it's not like the relationship is entirely over. The contracts still continue. But the programs that they were running with these two banks for the airport lounge access, those programs are winding down. What that entirely means, we'll have to wait and watch. But the stock's down about 3.5%. It's down 52% in the last 1 year. I mean, pull up a longer term chart of DreamFolks. It's been a tough one. This year itself, it's destroyed 40% odd in shareholder value. I mean, down 40% so far in 2025. So that's DreamFolk. Talk about what else is taking the Nifty higher today. TCS, Infosys. So actually, some of the Indian IT names are doing pretty okay. There's Hero MotoCorp reacting well to those numbers that came in. Rima, remember, was just telling us that at least in terms of June monthly sales, Hero's fine. They've met the mark. So that stock's also higher.
And they've also launched a new car yesterday. A two-wheeler. It's called Vida VX2.
Okay.
At an introductory ex-showroom price of 59,500. And Nomura says this is one of the most affordable electric scooters to date, at least for Hero MotoCorp. So there is a new launch which is also boosting sentiment for Hero.
Okay, all right. So more in the EV market coming through as well. Counting down, I think just 10 seconds to go as the day opens out. 25,588 as we kickstart the proceedings. Mid-cap index is very, very quiet. Let's see if it manages to build on some gains. There we go. The bell's gone. So the implied open was spot on because we've started 50 points higher. Nifty closing in on 25,600 now. The leaders this morning would include Hero Motor, the stock that we were just discussing. Infosys is actually holding out pretty well. There's a little bit of banks and IT on top, which is actually good news for the Nifty. So you've got Infosys, TCS up and about. There is ICICI Bank, which is about 0.5% higher. Axis Bank, 0.25% higher for the time being. Infosys is the one that really is standing tall with a gain of 1.5%. State Bank of India, again, 0.25% up. So it's not a big move on banks, but small incremental gains are coming through. Even Wipro is flashing some green. So banks and IT, not too bad. On the downside, IndusInd Bank, 2% lower. Asian Paints, now that CCI has confirmed that it is indeed starting a probe in those antitrust investigations. So that's a 1.5% knock on Asian Paints. Sun Pharma, Nestle, Trent, BEL. These are some of the stocks on the lower side. But yeah, I mean, the Nifty is doing pretty well, still holding on to a gain of 50 odd points. And for now, it's fairly steady with some of the large IT stocks and some of the large bank stocks working for the bulls.
Well, that's right. You know, a few stocks actually that deserve special mention from the broader market. Tata Communications, the standard brokerage report, well, that one's reacting positively. Big up move is what we're seeing out there. Right, they won a small order, so that one as well has opened well in the green. The stock of the morning yet again is Gabriel. You know, it's up, I think, another circuit. So effectively, just in a matter of the last 10 sessions, the stock has gone up by more than 60%, you know, even more than that. That's the kind of move you have seen. Remember, they announced that rejig, which is EPS accretive, margin accretive, and also, you know, if you put a number to it, last year they did an EPS of around 15 rupees. They're saying because of this entire, you know, consolidation that they're looking at, the EPS goes up by 7 rupees, which means it goes up by effectively 41%. So that's why the stock is, you know, being bid up. Keystone Realtors, they won a redevelopment project. The street likes that. Quite a large one out there. You know, Baman Rustamji joined us on the show just a couple of sessions ago, and he was sounding very, very confident. And I think in the last two sessions, if I got that correct, the stock is up close to around 15%. So big move is what we're seeing. Besides that, Ellen Berry listed yesterday with solid gains, 30% up. It's continuing its good form today. Sterlite is one of the top volume gainers on the upside, so that's moved up as well. And Seagull, that's another one that's moved up. So good start, guys. Let's see whether or not we can get past the 25,670 odd mark.
So for Seagull India, there is an order win of 1,199 crore rupees. So that explains the big up move that we're seeing. 4% up, very large volumes to begin trade with. And the other one is Prime Focus. Nimesh was telling us yesterday in D Street Chatter that this company is likely to raise some money via a preferential issue along with Kaya. Prime Focus was active yesterday. It's gained, I think from Monday, Tuesday, Wednesday, every day it's been gaining close to about 5%. So that is another big mover. RBL Bank, that continues to, gather a lot of buying interest. RBL Bank, I think, is gained now for 4-5 continuous sessions, and the stock rally continues. So RBL Bank, another 2% higher on that. And then you've got strength in some more names. So a Kamdhenu pops up on the on the volume charts, 24 lakhs to begin trade with. Inox India is seeing buy-in. Hiranba Industry, Tata Communication, Raymond has gained close to about 20% from the start of this week. On the way down, you've got Global Civil Project, a company that listed yesterday is retreating a tad bit. So you've got cuts on that. And then you've got softness in Dreamfolks, the stock that we were earlier referring to. Hyundai too, numbers were in line, but the stock has corrected close to about 0.5%. And MOIL, a stock that you were referring to, that's gained nearly about 2%. Rahul Arora, Chief Executive Officer at Nirmal Bang Equities, is now with us on this show. Rahul, thank you very much for joining us here in the studio.
Morning. Thank you for having me.
Okay, so how do we, how are you going into the earnings season this time? What should we expect? And is there any mismatch in terms of what you're expecting and what the price or consensus is suggesting, where there could be an opportunity?
So I think it's always good to enter with a little bit of trepidation and hope for positive surprises rather than going in through an overestimation and then coming out with a disappointment. I think, Rima, Q4 was not as bad. I think if you look at the upgrade to downgrade ratios compared to, say, the last 8-quarter average, Q4 was much better. So I think all things considered, there is not a very big disappointment expected from Q1. The only thing that I think people will be watching for is because so much has happened through Trump's tariffs and geopolitically in Q1 is what the IT companies say about the outlook for the next 12 months. I think people were expecting some of that commentary to come in Q4, but I think we'll have a realistic picture. Obviously, it's almost 12% of the index, so you'll have to wait and see how it goes. But I think by and large, for banks, it should be okay. Consumer will be a bit soft. Reliance should be okay. That's 70%, 75% of the Nifty right there. So I don't think you're going to enter into too many disappointments. Cement should be by and large flattish. Durables and electrical should be flattish. Defense should be about okay. So I think on balance, I don't think we're entering in where we're saying, oh my God, there's going to be some, really negative surprises. But then on a company to company basis, anything can happen. Of course, from where we were a few months back at 22,000 on the Nifty. We have rallied about 20%. So it's not like valuations are cheap right now. It's pretty much priced to perfection. So I think any negative surprises will be met very negatively by the market. I don't think room for substantial re-rating is there. And I still maintain my view that I think this will still be a range-bound year, where I think going back to the old highs of 27,000 or taking them out this calendar year might be a bit tough on current evidence.
I was coming to that. You've already answered partially my next question, because I remember, Rahul, our conversation on Editors Roundtable, and you were taking things with a pinch of salt and some healthy, perhaps, cynicism at some level, which is really the point that but the market can surprise you, right, at times. When you have cynicism, when you don't see any fresh positives ahead because earnings are where they are, valuations are where they are, I don't know. I mean, is there something that we're missing? Because in the morning, we were discussing this golden cross, right? The technical indicators are saying that things are going higher. You ask most of the techies, are saying the market's charging higher. On fundamentals, we're struggling to find a very solid reason. Your thoughts?
So a sector will emerge. We don't know what it is going into the result season. You know that famous English song that I found love in a hopeless place.
Oh, wow.
You might just find a sector in a hopeless market.
I thought Rahul's telling us more.
No, but I think to your points would be, I don't see, you've had a situation where, as I was saying about IT, you're not sure. I think if you look at the two-wheeler or the auto sales numbers by and large, I think two-wheelers have performed well. I think premium passenger vehicles are still doing well. Tractors are doing well. Premium two-wheelers are doing well. I think look at Aisha's numbers. Yeah. So I think that's a pocket that you can certainly look at. I think EMS players are still doing well. Of course, there is a bit of a slowdown because you did have intermittent rains in the first quarter in different parts of India. But I think by all prognoses, the rainy season is likely to be good. So if that happens and you have a proxy on rural, then two-wheelers obviously comes in. Then you probably look at consumer staples as well. You look at NBFCs, which are basically, ruling the roost in those kind of places. Credit growth to the agricultural sector might pick up. We just had our deputy head of research in Uttar Pradesh recently. I think the crop has been good. We are expecting a good Kharif output as well. So I think the rural part of the economy is something to watch. I think consumer discretionary is still doing well. I think by all, sort of numbers that I have been looking at, United Spirits look like it's going to have a good couple of years ahead of itself. We recently hosted Puneet Chatwal of Indian Hotels in our conference just about a week back. He's seeing no signs of slowdown. Of course, with what happened with Operation Sindoor and the unfortunate incident with the Air India, there'll be a temporary blip, but I think hospitality is one.
Structurally, it's still,
yeah, I think hospitals is another area. So it's not like it's all gloom and doom. There are still, pockets where earnings growth will be good. Now, you can question valuations in those backdrops, but, a lot of these will have a lot of mid and small cap names, but let's look at something like an SBI. Still coming to you at 1.2, 1.3 times price to book. If it manages to grow at 12-13%, the ROAs are at similar level. The ROEs are at about 1.5 or thereabouts for SBI. So that becomes a no-brainer. So it's not like pockets of value are not there. I think PSU banks, consumer discretionary, and a proxy to rural would be three themes that I watch into when I go into results season.
So when I hear you, I think the sum and substance is stop looking at the Nifty and waiting for the Nifty to make a move, do the dance. Look at stocks, find your stocks and stick with them. And you'll find growth.
That's always been my view. You don't buy the Nifty, you buy stocks, you buy businesses. And, I think just one line. I think even when we talk about stocks, right, we should actually address them as businesses. And I think that's a mindset shift that people have, that you're actually buying into a business. So if you're buying into a good quality business and it has 1 or 2 quarters that are, a bit of a down cycle, so to speak, you stay invested. And one classical example of that is the defense sector. I think they're so well priced to perfection. There could be a couple of quarters where numbers don't live up to expectations, but I think structurally it's a great sector to be invested in.
Okay, interesting. Hi, Rahul. Good to have you. And I'm still thinking about finding love in that. Interesting one.
Friday is still 2 days away. Nigel, wait.
All right. So, Rahul, let's focus on the banking name since we just spoke briefly upon that. And SBI is something that valuation-wise obviously has some support. That stake in NSE as well could be a little bit of a booster shot. And the stake in Yes Bank as well. But those are additional ones. What about going down the rug? If you look at it, these smaller banks, suddenly they've come to the party. IndusInd Bank, there was so much of trouble. You made the biggest money out there if you had the guts. You had RBL Bank. People are doubting the book. Now, Sunny, everyone's talking about that. The book value is 280 rupees. And that stock has moved very swiftly, 160 to 260. IDBI Bank as well, 80 rupee stock has become 105. Would you look down the rug or would you stick to the larger names?
One name that you missed out is Development Credit Bank, which is DCB.
Again, DCB, yes.
Despite the run, it's still not trading at one-time price to book. And I think if you look at the credit and deposit growth, it's likely to be 15-17% for the next 2 years. So I think it's not a bad place to be, Nigel, because I think if you aggregate the large cap private sector banks, all of them, you're probably looking at an NII and profit growth of between 10 to 13%, compounded for the next 2 years. And most of these, if you look at, say, ICICI, HDFC, of course, some would be at a discount, but the larger consensus ones are all trading at about 2.5 times price to book. So I think Federal Bank looks like an interesting play. And City Union Bank. I think these are 2 names that I would certainly look at. Both have ROAs of between 13.5 to 4, ROEs of 13.5 to 14.5%, and ROAs of about 1.5% or thereabouts. I think on both there is a lot of work happening on the digital side. So I think cost to income ratios could be coming down. GNPAs and net NPAs are under control, and I don't think both these banks need capital in the foreseeable future. I think we could extend that into NBFCs. I think if you look at something like a PNB Housing Finance or a Canfin Homes, that also looks interesting. I think, this entire segment, which is either operating on collateral or looking at salaried employees, I think could be standing us in good stead. Again, valuations are not too demanding in that front. And if you want to go a little further, I think although some of these stocks have done well, on corrections, I'd even look at something like an AU Small Finance Bank. So I think Federal, City Union, DCB, PNB Housing Finance and AU from the non-large cap space in the BFSI look interesting. And maybe on corrections, even insurance names like, say, an ICICI Pru Life. And if my call on the market goes wrong and it keeps going up, ICICI Pru Life has a very large ULIP book. That could be an interesting one as well.
Lots and lots of ideas there. Rahul, thanks very much for that. Actually, we have more questions, but maybe another time. But you did mention one space, which is hospitals, which is something where you're seeing interest. And I think that's the next big sort of conversation that we have lined up. Maybe you'd want to listen into this one. Apollo Hospitals obviously in focus after approving that scheme of arrangement that will see it combine its pharma, retail and distribution businesses with the digital initiatives under Apollo Health Tech. That's the name of the new entity that's going to be set up. And of course, that entity will then eventually be listed as well. To talk about this, the whole rationale and the creation of more shareholder value, we have Ms. Sunita Reddy, Managing Director at Apollo Hospitals, joining in. Ms. Reddy, thank you so much for being with us. So this is a big restructuring exercise, ma'am. We want to start by understanding the overall rationale. I think what you've said in the call as well is that it kind of simplifies the structure, makes it cleaner, and maybe also reduces the holding company sort of element that was being attached to the listed Apollo Hospitals. Just tell us what is the valuation you're looking at and the targets that you've ascribed, 25,000 crores in revenue over the next 2 years. How have you arrived at that? What makes you optimistic? Which of the businesses will take you there?
So first, in terms of the valuation, we've always felt that the sum of the parts did not do justice to the digital. The rationale behind doing the whole thing is not just to capture the value of the sum of the parts, but to go beyond and create a very strong retail digital business, which is omni-channel. And with this, with the composite scheme of merger, what we're doing is moving Apollo HealthCo as well as the telehealth business into the new company, as well as amalgamating KeyMed, which is the supply chain. And as we move forward, the front-end pharmacies will also get absorbed into this company. So you will have a very, very strong retail company, which is Indian owned and Indian controlled, which is very key. So there's a sum of the parts reason, there's the IOCC reason. The third is really to capture the synergies of the digital business, because currently they have 120 million customers. They are doing about 900,000 transactions a day. They have 40 million downloads. The sheer volume of that business and the potential to create a large into the hospital business is huge. And this is the way forward. This is the way that we're thinking about it.
Ma'am, just for clarity, so that we understand the projection that you've shared so far, that by FY27, Apollo Health Tech will have revenues of 25,000 crores. Can you give us a rough tentative breakup so we understand what will the scale and size be of the individual businesses by the time you get to that target?
Yes, so as you look at currently, they're at 16,237 crores. They are growing very fast, around 20% growth. As you look at forward, I think the offline pharmacy growth is around 20%, and the EBITDA generated from that is 1,000 crores in 2027. KeyMed is growing at about 18-19%, and with the introduction of private label, there is a very strong opportunity to also improve the EBITDA margin and the EBITDA coming from that, which will be 700 crores. Digital, we are quite sure that we'll get at least 60 to 100 crores of revenue. So total, the breakup of I've given you the breakup of the EBITDA because in the end, that's what counts. You will get 25,000 as you look at the 17 and the 20% growth coming from the three different, the digital, the offline, as well as KeyMed. So the 20% growth results in 25,000 crores of turnover.
Just one quick word, Ms. Reddy. Congratulations on this big announcement. You're guiding for a 7% margin, which effectively means at 25,000 crores, you do 1,750 crores. Almost all brokerages believe that this is too aggressive. You don't think so?
Not at all. Not at all. Because as you can see, I've given you offline. Offline is already generating 7% growth and growing at 20%. KeyMed, we know for sure. We've got experience. We're very sure that those 700 crores will come from there. And the digital, as you can see, is, we've been very conservative about growth, even though we're adding new revenue stream, which is the insurance.
Okay. Ms. Reddy, thank you very much for joining in. This is Ekta. Just wanted a sense in terms of the valuations that you all are now working with when it comes to Nuco. In September of 2024, the enterprise value which was subscribed during the Advent deal was around $2.4 billion or $2.7 billion. The street is working with probably a range of around $3 to $3.4 billion now. Is that a fair assumption?
Yes, I think the street is being very conservative because if you look at the potential of this company, it is let me say, very good. And I think that more than anything else, the whole valuation has been done by KPMG and validated by Axis Bank. Relative valuation of AHL to KeyMed is at 2.2 times. With that having been said, the transfer of telehealth business, which gives it another 80 crores of revenue, pure revenue, is is an additional benefit. All in all, I think, with the current swap ratio of AHEL shareholders getting 1.95 shares for every one share they hold in the new company is also reflects this valuation.
Okay. For Apollo 24/7, that's still making EBITDA losses. Can you just tell us whether you're on track to achieve a break-even by when in FY26? Is it going to be in the mid of FY26 or by the end of FY26? And your GMV target as well.
Break-even will happen in the fourth quarter. GMV target around 4,000 crores, but really I think, GMV is not important. Here's an omni-channel company delivering and potential to deliver 25,000 crores of revenue. So in terms of an engine for growth of revenue and profitability, I must say that this is very strong. And therefore, there will be no losses.
Okay. How is incremental capex going to be funded in NewCo? Because the reason I ask is that, earlier it was a part of Apollo Hospitals, and hence the cash utilization was across all of the businesses from hospital to digital. Hospital is really your cash cow, but that's now going to be a separate entity. So give us a sense in terms of where exactly are you going to be generating cash? How much is going to go into capex for NewCo?
There's very little going into capex because the way that the pharmacies are set up, it's only 10 lakhs per pharmacy, and the ROC on that is on the whole company is 20%. Having said that, they have 1,931 crores working capital. I think, use of working capital for the business is all that is required, since the advent funding of 2,430 crores has enabled the company to be fully funded for growth.
Okay. Apollo Hospitals is now going to hold a 15% stake in NewCo going forward.
Yes.
How did you arrive at that 15% stake?
15 plus 2% coming from another company, so totally 17% stake in the new company. How did we arrive at this? I think we did a fair value discounted cash flow method. In this discounted cash flow method, the Apollo Hospitals will own 42% plus what comes from the 17% that we're currently holding. The 42% plus the 17 equals 59.6%. In this, the 42% will get distributed to all of the shareholders. So that's close to 17,000 crores of revenue being distributed to all of the shareholders. Balance KeyMed holds 25. KeyMed and its shareholders holds 25% stake. Advent will hold 12.1%.
Okay, and any plans on monetizing this stake at all, or would you be a long-term shareholder?
I think, we should see how we take this forward. First is to see that we get the synergies of the company in this stake, and the board, a director seat on the board of AHL will help us make sure that these synergies appear. Going forward, there is an opportunity to monetize. As you know, a company with the size and scale that we have now created will definitely be valued. The value will keep increasing over a period of time. So when required for Apollo Hospitals' growth, especially in the hospital business, there is an opportunity to monetize some of this.
All right, Ms. Reddy, in terms of royalty, the new company will pay some royalty, right? I think it's approximately 10 crores is what you're talking about, but that will gradually increase. Could you tell us, how do you see this increase going about? I mean, what could be the ballpark number?
So 10 crores will be the beginning, and then there's a 5% reset that will happen every year.
5% increase every year, right?
Yeah.
All right. And also, a private label on the digital side, I think it's still very, very small, but you have plans to scale it up. Could you tell us, where is that number headed?
So currently it's 17.6% of the offline. We are moving to making sure that it's 17% of the online as well. And we're also using the KeyMed channel to push the private label. So there is an opportunity to supply the 75,000 pharmacies and the 3,000 hospitals that KeyMed is currently supplying.
Okay. Just a quick word with regards to the synergy between the two businesses. The reason I ask is, how much are you actually going to benefit from, say, the funneling of patients between the two businesses? And what is the plan in terms of synergies going forward?
So if you look at just one part of it, which is quite huge, the diagnostics, 20% of the customers come from Apollo. They come from Apollo Healthco, which will again become Apollo Tele-Technologies. So definitely, we are seeing that happening in the diagnostic business. In the insurance business, there is potential of 80 crores revenue, but beyond the potential, for customers who now see that they can pay for their healthcare needs using the insurance policy offered by 24/7. Again, another funnel. The third funnel is that we will together work with corporates, and the retail presence that Polo Healthco has is tremendous, with 40 million downloads. So there is, again, we are working on synergies that will make sure that the conversions that happen with some of the pharmacy consumers, both online and offline, moving into the Polo hospitals.
Okay. So big restructuring done. I'm just wondering, I mean, in any case, you had gotten funding from PE giants just a couple of years ago when the Advent deal, etc. From infusing capital perspective, whether it is in listed Apollo hospitals, I mean, or even in the new entity that's being created, is there anything on the horizon? I mean, there's enough cash being generated in the business as well. So just from that perspective, how do the next 2 to 3 years look?
Well, I think that all of our businesses is about being self-sustaining, generating cash for growth. Clearly, I think that given the numbers, if you look at the 25,000 crores that we're projecting, growth of 20% from 16,000 crores currently, the EBITDA that's being generated from the offline business is 1,000 crores, and we're quite sure we have a line of sight of this. Keymed by itself will generate 700 crores of EBITDA, and we're being very conservative about the digital and saying with profitability, they will generate 50 crores. So 1,750 crores of EBITDA coming from these three lines of business in the digital space. As you know, Apollo Hospitals is already generating 1,200 free cash flow. So there is more than sufficient headroom for growth. I mean, liquidity for growth. Beyond that, I think if you look at the debt levels in both companies, at Apollo Hospitals it's 0.2, here it is 0.6, with only working capital being used for day-to-day activities.
Sure. All right. Ma'am, we'll leave it on that note. Thank you very much. Offers us a good perspective and clarity on the new structure that has emerged. Good luck with all the plans. Thank you for joining in today.
Thank you.
Thank you. We'll take a break on that note. Coming back on the other side, we'll be in conversation with the management of Aarti Industries to talk about the company's FY26 outlook.
Welcome back. Well, the markets are holding on to mild gains, but a lot of stocks actually are doing a thing of their own. So let's talk about the chemical space now. The sector has performed, amid the geopolitical uncertainty. We'll also get a sense about what's the impact on supply chain and how is demand shaping up for the remainder of this fiscal. To help us out with that, we're joined by Suyog Kotecha, the Executive Director and CEO of Aarti Industries. Hi, Suyog. Thanks a lot for joining in. Well, you had a brokerage note that came in earlier this week, and they said, that's MK, they say that the US tariff situation may create new opportunities for a company like yours. Would you agree? If yes, in which sectors are you observing this?
Yeah, I think let's take a step back. I think we're just coming out of unprecedented quarter, and given you started by saying sort of understanding impact on supply chain, I think it's very rare that within a quarter we have seen multiple significant geopolitical events. Starting with US tariff announcements on first week of April, followed by India's counter to terrorist attack in Kashmir, then flare up of Iran-Israel, and then pause, and then renegotiation of US tariffs to the multiple countries in the world. So I think with that kind of movements, supply chain shocks are quite real. Right. I think we have seen raw material volatility where, going down by 20%, going up by 15% in same quarter, which is quite unprecedented. Even from a physical supply chain point of view, right? For example, Kandla port, from where we export significant quantity of our products, was shut during the mid part of this quarter, and till date, the congestions are quite severe. So a lot of shipments getting delayed. having an impact on freight cost. Even the June Middle East flare-up saw a lot of shipments going from Middle East to India to US getting significantly delayed. So I think all of that, I think the industry, especially the export-oriented sort of companies, continue to manage this volatility. As we look forward, I think many of these aspects are settling down. There is one major event that we are yet to see, which is what you referred to in terms of what happens to US-India trade deal, and in general, what US does with sort of reciprocal duties beyond 9th of July. And if that settles in favor of sort of India versus rest of the world, we will definitely see demand pick up. But at this point in time, I think customers are waiting to get full clarity. And sort of, we expect that clarity to emerge in the next couple of weeks time frame.
Yeah.
But today is difficult to make that judgment call.
Yeah. So Suyog, obviously the freight situation is very, very difficult. But do you think it's creating a bit of an opportunity for some of your products? More tariffs come about from other parts of the globe as well. The tariffs could be relatively higher. Do you see it creating an opportunity in an adverse situation?
In a mid to long term, yes, right. I think in a mid to long term, we had described this in our. There are some chains where we compete head on with China. I think in those chains we saw pickup in demand in US, and as I said, if it gets settled in favor of India versus China, we will definitely see pickup in demand. But at the same time, in near term, we do see this volatility impacting in terms of customer taking decisions, because I think businesses like certainty in environment, right, to make business calls. And when that certainty is missing, when that clarity is missing, we also do see people holding off from making decisions from a large, year-related volumes or multi-year contract kind of situations.
Suyog, hi, Rima here. Some of the MNC agrochemical companies are still cautious when we chat with them about calendar year 25, calendar year 26. And considering a big chunk of your revenues coming from this sector, give us an indication. I know you've got an EBITDA guidance of about, I think, 18,000 to 22,000 by FY28. Tie in your, aggression, what you see, versus what we're hearing from your MNC counterparts.
No, so I think even our outlook is quite consistent. I think everyone has been talking about sort of volume-led demand growth, but I don't think any one of us is budgeting for margin increase at this point in time. And that's what we also hear from our agrochemical clients. I think a lot of stories around inventory buildup, and in that context, correction in the overall pipeline is kind of done for most of the value chains. And in that context, we see volume-linked growth coming, but it is coming at a relatively significantly lower margins compared to where it was, let's say, 2-3 years back, given kind of demand-supply imbalances we have globally. And that's the story we continue to hear. That's the story we continue to observe. So we continue to see demand growth, but at a relatively, stressed margins.
I think your FY26 capex was about 1,000 crore, and the second half of the year will see the staggered commercialization of Zone 4. So which products will be available first? How will the revenue accretion? And I think after that, you're going to be focusing a little bit more on the balance sheet, because a chunk of your capex would be done by the end of this fiscal year.
Yes, so I think that's right. I think this year we will spend around 1,000 crore of capex. And part of that greenfield site will get commissioned this year. Most of these products will go into agrochemical, pharma, and coating sector. But the real benefit of that site will start coming in sort of subsequent financial year, right? When we commission the full site and we ramp it up also to decent utilization levels. At this point in time, I think during this year, the capacities that we commissioned last year, our expanded ethylation capacity, our expanded nitrotoluene capacity, and our expanded MMA capacity, I think we remain focused on sort of utilizing those capacity to the full extent possible. The new greenfield Zone 4 will start kicking in towards the end part of this financial year, but the real benefits, we should be able to start seeing it in the next financial year.
Suyog, thank you very much for joining in. Short conversation today, but we'll chat when the numbers are also out. Thank you once again for joining in. Let's talk about M&M. M&M sales numbers beat street expectation in the month of June, and the company continues to see strong demand for the SUV segment. My colleague Mangalam spoke with Nalinkant Golagunta, the CEO of the automotive division, and began by asking him about the models that led to this growth.
Strong performance in June, 18%, like you said. really what has given us a lot of impetus over the last few months has been the 4 major launches we did last year. And as you know, we had the 3XO launch on the Thar Rocks, both on the ICE side. And we had 2 very strong EV launches, the 9E and BE6 as well. So that has given us the impetus, that has given us some of the growth coming in as well. But the bedrock of the volumes for us, of course, continues to be our Scorpio platform, our XUV700 and the Bolero as well. So that continues to be a strong foundation. On top of it, the growth has come from these 4 major models.
So, the first quarter so far, your SUV sales have been 22%. What we want to understand is how sustainable is this? And are you likely to up your guidance of mid to high teens growth in FY26 basis this 22% performance in the first quarter?
Yeah, so we called out mid to high teens and we stick to the performance outlook at this point in time. We are not upping it. It's very early in the quarter, and very early in the year for us to look at it, but we're confident that we'll be able to do the mid to high teens growth.
All right. And what about the EV numbers? What's the monthly run rate out there? What about the utilization and the capacity that you're operating at?
Yeah. So when we launched, we said that we have operational as about 5,000 capacity per month. As you know, we launched 3 packs, pack 1, pack 2, pack 3. And but right now, what we are retailing out there to customers is only pack 3, the top end variant. And there's been strong demand for that. And we are at about 4,000 production and 4,000 billing and retail at this point in time, and just on that 1 pack. As we go into festive, we'll be launching the other variants as well, pack 1 and pack 2. So as we get ramp up on those, we should be able to see a little bit of a higher volume coming in from there. But what we have operationalized, we're confident we'll be using most of it.
And when you say higher, it would be 5,000 or would it be more than that? Are you increasing your capacity?
No, at this point in time, what we called out is 5,000 as an operational capacity. So that's what we'll be operating on.
And what about the rare earth issue? Because, the industry is facing that. Are you facing that as well? What's the kind of inventory that you're sitting on for the rare earths? And what's your plan after that?
Yeah, so currently we have inventory of all the affected parts. We have done a full analysis on all the affected parts. And as you know, there's end user certification which has to be put in place. So that's something we're working very closely with the suppliers to get it done as well. We're working closely with the government as well as SIAM to get there. But we're also looking at alternate sources. We're looking at alternate designs as well. So overall, currently we have the inventory for the production that we want at this point in time, but we're actively working to de-risk.
How many months are you covered for?
No, it's hard to say at this point in time where we are because the suppliers are also finding opportunities to find alternate supplies for us. So it's very hard to say, but currently we're well placed.
All right. And inflation. Tata Motors did speak about considering price hikes. What is the kind of inflation that you've faced so far, and will you be considering price hikes too?
Yeah, so price hikes is part of the regular running of the business for us. So we had projected in our own yearly planning what that looked like. And so we continue to see similar benign trends on inflation. So we'll stick to that. Yes, there is a price hike which will come up, but it's not something which is immediate.
What would the quantum of that be?
It'll be what we have done regularly on a quarterly basis. It's hard to say at this point in time because we are still a month or 2 away from that. And we'll have to see what the inflationary trends are. So hard to say at this point.
All right. While SUVs did well, the commercial vehicles were largely flat. And in that, there was specific weakness in the sub 2 tons vehicle. What exactly is driving this? And are you seeing any sort of change, any turning of sentiment there?
Yeah, so sub 2 ton has on the load side, if I may call it, not on the passenger side. On the load side, we have seen weakness. And it's a weakness we have seen over the last few quarters. The hypothesis we have is a lot of the volume is starting to head towards higher tonnage. And so we're seeing some growth coming from there as well. And there's also the unorganized sector, which is underneath that, below that as well. So a bit of pressure from both sides to some extent. And but the beneficiary for us, obviously, is the 2 to 3.5 ton, which is where we have a very strong portfolio. So while the industry has been muted growth, we've actually given consistent growth. And the market share gains that we have shown over the last few quarters and the market share gains we will see in Q1 as well when the final industry data comes in, tells us that we're on track.
That's the one that is driving your CV sales growth itself. For the first quarter, it's up 4%. Here too, your guidance is high single digit for the full year. So on the one hand, where your SUV, you've outpaced your guidance so far in the first quarter, in CVs, you are fairly away from there. Do you still maintain the high single digit growth guidance for CVs?
Yeah, like I said, very early in the year for us to do any changes in numbers at this point in time. We have a festive season coming as well. We are starting to see some momentum in the rural segment on Bolero and other products as well. So we are hoping that that will translate into some growth coming on the CV side as we head into the festive season. So again, very early to say, so we are sticking with our high single digits.
What about three-wheelers? That was a big 37% jump in June. How much of that was led by electric vehicles? Do you have a target contribution coming in? I mean, what's the prognosis here?
Yeah, so I don't have the exact numbers. It's a separate business unit, but overall consistent growth there. But a lot of that was also coming on the passenger segment side within the three-wheeler EV segment. So that's where a lot of the growth was coming from.
Why is there so much volatility in exports? All of 36% growth in the first quarter, but June was just 1%.
Yeah, so it's hard to say. On an export business, it's hard to look at it month on month. We also have major launches coming up. So we have some stocking that we do in certain markets at a certain point in time versus others. So it's better to do it at a quarterly level and probably even at a yearly level. So overall, we're confident with what we have. We just launched the 3XO a couple of quarters ago in South Africa. It won the Car of the Year award in South Africa. We're just about to launch 3XO in Australia this week. So we are very confident with what we have as products, and we look forward to taking our EVs as well globally in the next few years to come as well. So quite gung-ho on that front, but hard to take a trend out of monthly volumes at this point.
So what's the annual target that you have for exports in terms of volumes?
Again, we don't put out numbers on IO at this point in time, but it should be strong double-digit growth.
Strong double-digit growth. And finally, you called out a lot of new launches in the international markets. What's the kind of facelifts and launches that we can expect in the second half of this year for India?
Yeah, we have quite a bit in store. The most important thing is we are putting out an event in August as well, where we'll be talking about our new platform. That will anchor all our new vision SUVs going forward. So we're super excited to share our vision there and hope the customers will respond with the same excitement as they've done over the last 5 years.
Could you give us a peek into what you are going to talk about there?
Well, the teasers give some clues there, so I'll let the guessing game go on, but we'll be talking about platform and a few vehicles which will be anchored on the platform, which will be showcasing there.
Okay, that's the word coming in on M&M. By the way, the market at the index level is absolutely flat, but ITs are rocking today. The Nifty IT index is a gain of 1.5%. And in fact, the top 4 Nifty gainers today are all the IT heavyweights. So Infosys right on top, 2.5% gain. TCS, 1.5%. Wipro, 1.3%. Tech Mahindra too is moving up with a gain in excess of close to about 1%. Banks are a bit on the back foot, and the top Nifty loser today is IndusInd Bank. That's down more than 3%. Goldman Sachs today has downgraded IndusInd Bank to a sell, and they've put a target price at 722, so much lower than the current market price of 850. Mitesh is now with us for a few calls, 10 a.m. calls. Mitesh?
So, good morning. I think, you were rightly pointing out IT as the space to watch out for. In fact, a lot of IT names have given breakouts in the hourly to hourly chart. So, I have a buy on Infosys with a stop below 1620 for a target of around 1685 to begin with. Maybe then we look at high levels. And a sell on ABB, which is turning slightly negative. So, keep a stop of about 5980 here, look for targets of 5750.
Okay. The stock to watch just moments from now will be HDB Financial Services as it makes its debut on Dalal Street. The issue price was 740, but it's seen very strong subscription. It was a large issue of 12,500 crore rupees, and it saw a subscription of 16.7. And it's open with again a 12-13% higher, now 835 rupees on HDB Financial Services. Valuations for it are cheaper than some of its peers, like a Bajaj Finance, for instance. So it's a good debut for HDB Financial Services, 13% up on that. The bell has gone now at, okay, 5 seconds to go for HDB Financial Services. Mitesh, what about some of these private sector banks? They've had a good run, but they've retraced a bit now. You've got even a Bajaj Finance. Some of these financial names are under pressure. Okay, that's the debut of HDB Financial Services. It's opened with a gain of close to about 13 times. The valuations, as I said, were seen cheaper than some of the Bajaj finances of the world. I think analysts had pointed it at close to about 2 to 3 times. So lower than a Bajaj Finance, which trades at say 4.5 to 5 times. So it's a good debut on day one. 740 was the issue price. The stock is open at close to about 840 crore. 840 rupees. We'll get into a break on that note. On the other side, Manisha Gupta will come back and chat about commodities. Stay tuned. Welcome back. Let's now turn our attention to the commodity markets. Manisha Gupta, as always, is joining in. Manisha, morning. What are you looking at?
Well, thank you for that. I'm looking at soft commodities right now because these are the ones which have seen big losses when you look at the first half of this year until now. Well, on my radar is sugar because we've seen sugar prices decline quite sharply. There is weak interest from the buyers at the Intercontinental Exchange. And the sugar prices, with the kind of decline that we've seen trading below 16, are now at a 2021 low. So it's a multi-year lows that we've seen come in for the sugar prices there. Also, when you look at the overall supplies, those have been increasing as well. We have high production in Brazil. It also has to do with abundant rains that we have seen in Asia. That is leading to a higher production coming in from India and Thailand as well. So that is not very supportive for the prices. Also going forward, because the crude prices have continued to decline, the ethanol prices have declined. So there is more that you've seen as cane go in for sugar rather than ethanol, increasing inventories yet again. The other one on my screen is cotton, where the prices are now trading at a 2020 lows. The US production is expected 6% year on year. The other major producer is India. Here as well, because we're looking at very strong monsoons for the month of June, 109%. July is expected at 106%. So sowing here also has gained quite strongly. The markets also are looking at weaker demand coming in from China, and that clearly seems to be weighing on prices. The other one is Arabica coffee. Here as well, we've seen prices decline to a 6-month lows. Higher crop supplies in Brazil, higher global inventories, not so strong demand coming in from Europe has been weighing onto the space here as well. And the last one is soybean. The prices here are trading at around 12-week lows. There is higher production in the origin countries like Brazil, Argentina, Australia, US, including India as well. For India, we are trading below MSP now for 8 to 9 months. And the Chinese buying is not so strong because of the tariffs that they have in the international markets, especially from US, and that continues to weigh on as well. I want to take you through on what we've done in this year until now in sense of prices then. And I'll start with edible oil as a space. Barring soybeans, which is up by nearly 3%, you have sunflower, which is down 3%, and palm oil prices down by 9% in this year until now. Take a look at the grains then, and wheat is down 3%, and you have corn prices trading 9% on the weaker side for the year 2025 till time. Good production, especially when it comes to wheat, whether it has been about Russia, Ukraine, India for that matter, continues to weigh on prices. And then you have agriculture, industrial commodities like rubber used in gloves and automotives, etc., and cotton for textile and polyester, etc. As you can see, double-digit percentage decline here as well. Cotton is down by nearly 15% and rubber down 17% in this year until now. And this is the final plate which shows you sugar, cocoa, coffee. And as you can see, we've seen sugar prices decline by 18%. Cocoa is down 24%, coffee down 8% as well. So overall, inflation when it comes to food commodities definitely does not seem to be a concern because the first half of 2025 has seen very sharp declines coming in for most of them.
Thank you very much for that. Now let's talk about Keystone Realtors, where the company has won a cluster redevelopment in Andheri. Vinny joins in with the numbers. Vinny?
Hi, good morning. So yes, Keystone Realtor Developers has actually won an 8 housing society redevelopment project. This is in Andheri West. The gross development value for that is around 3,000 crores. Cumulative area of around 4.57 acres of land, and saleable value area is around 10.6 lakh square feet. Now in this, as of now, development agreement is signed with 5 of the societies, and letter of intent is received from 3 of the societies, where obviously they'll be signing the development agreement, and they were confident confident on that front. So 8 societies where they've signed. And do not forget that just yesterday also we'd seen that they'd won one more redevelopment project of around 4,500 crores in science. So back-to-back 2 days of redevelopment project.
Thank you very much for that. Inox Wind is the other one that we are tracking right now, where Motilal Oswal has initiated coverage with a buy. Stock is excited. Vivek joins in with the details.
Well, that's right. So, interesting note coming in from Motilal Oswal Financial on Inox Wind. So, they've initiated coverage on the stock. They have a buy rating. They have a target price of 210 rupees a share. What they're saying is that the company is one of the leading vertically integrated player as far as the wind energy sector is concerned, and they like the stock after the recent correction that it has seen. Remember, they're talking about the company's capabilities where it delivers end-to-end solutions right from concept to commissioning, as well as operation, as well as maintenance of the entire wind power project. So the entire life cycle is taken care of by the group. What do? They, number one, manufacture both 2 megawatt as well as 3 megawatt wind turbine generators, and they had an order book of almost 3.2 gigawatt at the end of FY25. Along with that, there are 2 listed subsidiaries. Remember, Inox Green Energy manages a 5.1 gigawatt O&M portfolio. This includes both own as well as third-party portfolio. And as far as financials are concerned, they expect the company to deliver a consolidated EBITDA CAGR of 38% from FY25 to FY28. They see a ramp up in WTG execution from 705 megawatt in FY25 to close to 1.8 gigawatt in FY28. And the target price multiple that they have is at almost 25 times FY27 earnings, earnings per share.
Thank you very much for that. Once again, let's put the spotlight on HDB Financials. Day one today on Dalal Street, strong opening, 13% higher on listing day. MK has initiated coverage on HDB Financial with a target price of 900 rupees. They've got a buy rating. That's about a 22% upside compared to the issue price. And it values it at 3 times FY27 price to book. Their positive view stems from its diversified, granular and large-scale lending franchise. So HDB Financial Services higher. Another one is SBI Cards we should look at, because today Goldman Sachs has downgraded SBI Cards to a neutral with a target price of 1,006, and Goldman Sachs has also downgraded IndusInd Bank to a sell with a target price of 722. So these are some stocks in the financial space which are under pressure. By the way, for the Nifty as well, it's flat, but now it's got a red tick going for itself. So the Nifty is moving towards 25,500 at the low point of the day. Get into a break. On the other side is our special segment. It's the economy. Lata will be in conversation with Ajay Srivastava of Global Trade Research Initiative and S. Ganapati of Gokuldas Exports on the likely options for exporters from 9th of July.